Insights on Dave Ramsey's Complete Guide to Money. Narrated by Glenn Argenti. Overview. Dave Ramsey's Complete Guide to Money 2011 is the handbook of Financial Peace University, his 9-lesson course about personal finance. It answers questions about money and shows you how to figure out your finances in baby steps. Ramsey teaches about saving money, getting out of debt, and investing. He covers everything from kids' allowances to retirement planning. You will learn tips for negotiating a deal, picking the right insurance plan, and buying or selling a house. After you build your wealth, you will be able to start giving, which is the ultimate and most important goal in your financial journey. Super saving. Sometimes, hitting rock bottom is all you need to get your finances together. However, you don't need to go broke in order to do that. Your first priority is to save money. 7 out of 10 American people wouldn't be able to handle a $5,000 emergency, and that has to change. Start by putting $1,000 in a beginner emergency fund, and do it fast, even if it means surviving on rice and beans for a little while. Although $1,000 isn't much, it plays a huge role in your finances. It signifies change. It means that you have actively decided to do something about your money. An emergency fund is there to make sure you can get out of debt. You start adding to the initial $1,000 after you settle your debts. It is necessary to keep your emergency fund instantly accessible. However, you shouldn't keep it with the account you use for groceries. A dedicated money market account is ideal. You can use it for checks and have ATM access. Once you're ready to save for purchases, you need to know when to pay cash. If you pay in cash, you don't have to worry about getting ripped off with interest charges. For wealth building, discipline is key. It may look easy to put $100 aside a month, but doing it every month for a couple decades is difficult. You should also start saving as early as possible. At an interest rate of 12%, someone who starts investing $2,000 a year at age 19 for only the first 8 years ends up with over $2 million at 65, with only a $16,000 investment. Someone starting at 27 and investing the same amount with the same interest rate every year until 65 would not catch up. This is why starting early is crucial. Relationships and money. Money messes with every aspect of your life: relationships, marriage, kids, friends, and family. Money problems have the potential to destroy your whole life, and they are the leading cause of divorce in America. Men tend to see money like a scorecard, while women see it as security. Almost every marriage has a nerd who is a saver and a free spirit who is a spender. This is natural, and it is possible to agree on finances, even with all these differences. To do this, you and your partner need to hold a budget committee meeting once a month. The nerd is usually the one that comes up with the budgeting plan, but the free spirit has to be involved. Single adults have different struggles. Loneliness may cause them to spend excessively, and single parents struggle the most to keep their kids happy and healthy. Try to find someone experienced you trust that can be your financial mentor. Kids learn by watching. Familiarize them with the concept of money and savings early on, and be their financial role model. Teach them how to work, save, spend, and give. From the ages of 3 to 5, give kids spontaneous rewards for any small task they do. Once they're 6, you can introduce the concept of earning money for chores you commission them to do. For example, give them $1 per chore. After 13, debit cards can be introduced. Kids can be responsible for their own savings. You can help them by matching their savings dollar for dollar and depositing the money into their accounts. After 18, kids can handle their finances on their own. You can help them out through a rough spot, but you shouldn't let them be financially dependent on you. Some family members or friends may come to you for financial help. You can give them money, or you can help them by teaching them how to handle their own finances. Don't buy a drunk a drink. Budgeting. Tom, a successful business owner, couldn't figure out why his business was thriving, but he was still drowning in debt. While he did have a budget for his business, he didn't have one for his household. A plan is essential in anything you do. If you do not have a plan or a goal, you will never be able to get anywhere. Your financial plan begins with a budget. Your first monthly budget will probably be a mess, but you will slowly get the hang of it. Aside from your budget, you need to learn how to balance your checkbook. It is important in order to avoid overdrafts on your account, which can stack up like crazy. People avoid budgeting because they feel that it is restrictive, but it doesn't have to be. Just because something is not within your budget doesn't mean you can't spend money on it. Some budgets don't work, and it's not the budget's fault. Budgets should be flexible. You need to constantly tweak your budget. It is not set in stone. Every month's budget is different. To start, think of the 4 walls: food, shelter, clothing, and transportation. They hold your life together, and they are a priority. Being able to provide these for your family will free you of any shame and fear. One good way to budget is the envelope system. It's been around forever, but it works. For example, you put money into an envelope for food, and you only spend that money on groceries and restaurants. Once it's empty, you don't spend $1 more on food that month. Dumping debt. Our idea of debt is built around misconceptions that have been successfully marketed to us. When it comes to debt, we have to completely change our way of thinking. Contrary to popular belief, the lottery isn't a way to get rich fast. It is merely a tax on the poor, who are twice as likely to play as those with higher incomes. The real way to win is to invest the money you would have spent on lottery tickets. Another way you're getting ripped off is by believing car payments are a way of life. Millionaires avoid overpaying for cars because they settle for reliable used vehicles and pay cash. Credit cards are not necessary and can easily be replaced with debit cards. You can live your life with only 2 plastic cards in your wallet: a business card and a personal one. Be aware that you generally spend more when you pay with cards instead of cash. If you think debt consolidation can get you out of a rough patch, you're wrong. You can't borrow your way out of debt. Debt will never be a way out. And as stated in Proverbs chapter 22, verse 7, the borrower is the slave of the lender. To get out of debt, you must stop borrowing money. You need to start saving. Sell the things you can do without, and understand that you have to work hard to reach financial peace. Credit sharks in suits. A lot of people consider a credit score, or FICO, as a measure of winning financially. In reality, your FICO score only represents your affinity for debt. It consists of your debt's history, levels, duration, type, and new debt. It doesn't take into account your savings or even your income. Inaccuracies on credit reports are extremely common. You should go over your credit report at least once a year and correct any inaccuracies. Always notify an agency of inaccuracies by written letters. You may also have your credit report destroyed by identity theft. You should immediately place a fraud victim alert on your credit bureau report, then get a police report. You won't have to pay anything, as this is theft. Document everything and be persistent. You are not at fault. You most probably will also encounter illegitimate collectors who will try to manipulate the money out of you. Credit card collectors are the worst. To free yourself from their claws, you should know your rights under the law. For example, collectors are only able to call you between 8 a.m. and 9 p.m. your time. If they call you at any other time, you can simply tell them that their call is being recorded and that you know they are breaking the law. If you need to pay legitimate collectors, pay them what you can. Pay your priorities from your income and reserve a percentage of the rest to settle your debts. It may not be enough to cover what you owe, but at least you'll be sending something. You should never give any collector access to your bank account, and always request a physical copy for any deals or settlements. The power of marketing. Companies are always competing for your money. They devise detailed plans and spend an absurd amount of money on marketing strategies to draw you in. Personal selling is a marketing technique that you need to look out for. It can be fun and easy when it leads to a win for both sides. But many salespeople use it in a negative way. Instead of answering questions with yes or no, they skillfully turn them around into more questions to keep customers engaged and generate a sale. Another dangerous marketing technique is financing. You are offered a deal that makes you consider how much money you'd be saving instead of how much you'd be spending. A common deal is 90 days same as cash, usually with a 24% interest rate that will cost you a fortune. Media advertising is also extremely powerful. It is based on repetition. If the same product is thrown in your face multiple times a day in a captivating way, you may give in and purchase it eventually. The last marketing strategy you need to be aware of is product positioning. It is an intricate science that utilizes specific colors, brand recognition, and shelf positioning to get you to buy. When dealing with major purchases, always discuss them with your partner first, and always wait overnight. Impulse buying can make you spend a lot more than you need to on things you don't need. Insurance plans. Steve and his wife Sandy got out of debt in 12 months, built a huge emergency fund, and took out a $400,000 term life insurance policy. Steve had terminal brain cancer and wanted to make sure that his wife would be okay without him. Insurance is one of the most important things you have to sort out. For homeowner, renter, and auto insurance, increase your deductible and carry adequate liability. And if you drive an older car, drop your collision coverage. For health insurance, increase your deductible and out-of-pocket maximum, and always opt out of the maximum payout limit. Disability insurance replaces your income if you're unable to work, and occupational disability coverage can give you enough income to carry you until you learn a trade that you're able to practice. Try to stay away from policies that cover you for 5 years or less. Long-term care insurance is for the day you turn 60. This covers all or part of the fees for nursing homes, assisted living facilities, and in-home care, and you don't need it before then. You should have already learned how to monitor your credit reports on your own, so you don't need a policy that covers identity theft. Go for one that can do the cleanup job. Life insurance should never be a long-term plan, only one to tide you over until you have enough money to become self-insured. Buy term life insurance, which is cheaper because it has no savings component. You want a policy that will pay about 10 times your income. Never treat insurance like an investment. Bargains and negotiation. In most cultures, negotiating price is the norm. Your goal is not to harm the business owner. You can both get what you want in any deal you make. Don't be afraid to ask for a deal. You can adopt numerous negotiating strategies that will guarantee you a good deal every time. If you let the seller know that you are willing to pay full cash, they will be more eager to lower the price. Cash ensures that they will get their money immediately. Sometimes, talking less is more. If you hear a price that isn't good enough for you, just say so, or don't say anything at all. Sellers hate silence and will come back with a lower price to fill the void. You can also just start walking away. Sellers will almost always follow you with a better deal. At times, you may need to get creative. If the seller is set on a price, then use the "if I" technique. That's when you say, "If I settle for that price, then you must include." If it works, you will get an extra and technically free product. Garage sales, flea markets, pawn shops, and conventions are great places where you can negotiate a favorable deal. You're usually dealing with one individual there, not a big business. Investing. The pinnacle point of your financial life is when you make more money yearly from your investments than from your job. Investing doesn't have to be complicated. You can keep it simple and stupid. If you need to buy a financial advisor's help, find one who can make the process of investing sound simple to you. One of the most important strategies in investing is not to put all your eggs in one basket. This is called diversification. If something goes wrong, you won't lose all your investments. It simply lowers any risk. Investment is risky, but mutual funds are the best long-term option and ensure great diversification. Instead of putting $20,000 into a company that could collapse the next day, you'd be investing that amount into 100 companies through the mutual fund. If one company fails, you have all the others backing you up. Retirement and college. The next thing you need to consider is a wealth-building plan for retirement. You can't guess your way through a retirement plan. You need to know what you're doing. For instance, a lot of people think of their 401k as their emergency fund, which should never be the case. The best way to build your wealth is to invest 15% of your household income into both Roth IRAs and pre-tax retirement plans. Because our government doesn't care about us saving, we need to act smart. For example, if your 401k is invested in a mutual fund, you are saving with a plan that receives special tax treatment. Your 401k isn't the thing making you money. It is the coat protecting your money from the cold of taxes. You have many options to choose from: an IRA, a Roth IRA, which provides you with tax-free growth, a simplified employee pension plan, and the 401k, 403b, and 457 plans. 401ks are the most common in companies, and when you leave your job, you should always ask to roll your company-sponsored retirement plan into an IRA. While thinking ahead to retirement, you should also consider college funding. Remember that you do not owe your children a college education. It is vital, but it is also a privilege. You should never prioritize your children's college fund over putting food on the table. An education savings account is definitely worth considering because your money grows tax-free. If you don't meet its income limits, consider a 529 plan. But do your research, as some of them don't grant you full control of your mutual fund investments. Savings bonds and prepaid tuition plans are not as financially effective as using mutual funds. Never use student loans, as they are debt, and that is the first thing you need to get rid of in your life. Careers. Change is the only constant in life. We change jobs often, with many people having 10 different jobs over a period of 20 years. It's a myth that you will get used to a job you don't like. If you've been driven by precision your entire life, you simply won't change. And if you hate your job, you will never excel at it. When job hunting, you need to have a plan and develop a strategy. You can't just mail a stack of resumes and wait for a call. Do your research on every company you're considering and figure out exactly what they need. Have an introduction letter, a cover letter, and a resume ready. Tailor them to the recipient. Only include what you think they need, and get straight to the point. Mention the date you will be contacting them by phone, and stick to it. Sometimes, part-time jobs are necessary to get you out of a rough patch, and you shouldn't be ashamed of having one. Just remember that they are short-term. Real estate and mortgages. Your home is probably the biggest investment you will ever make. You should pay it off early. In your lifetime, you will either sell or buy a house, so you will either have to think like a retailer or like an investor when you do. When selling, you have to make sure your house is in perfect condition. You have to make potential buyers feel like they are standing in their house, not yours. Hire a good agent if you aren't confident about all the details. They will walk you through all the paperwork. When buying a home, always get title insurance and land surveys. If you want to buy through an agent, try to find one that does not think like a retailer. Agents have access to the multiple listing service, which provides a ton of extra information about houses. Some things you should always consider in a house are its location, its price relative to the neighborhood, the view, and the outdated elements you can easily change. Always have a house checked by a certified inspector. Steer away from mobile homes and timeshares because their value only goes down. Mortgages aren't really recommended, but if you have to, you should only get a 15-year fixed-rate conventional mortgage, put at least 10% down, and make sure that no more than a fourth of your take-home pay is going to your house payment. The best way to buy a house is by far the 100% down plan, which is paying cash. If you have that amount of money in the bank, go for it. It will give you an immeasurable amount of freedom. Giving back. God is a giver. He gave His only Son to a world He loves so much. Giving is the only thing that unlocks your full potential. The great misunderstanding is that you build wealth by hoarding it, not by giving it away. It is easy to give someone else's money, and you should understand that. God is the real owner of your money, not you. He would want you to give that money, and He trusts you with it. God doesn't need your money. He made you in His image, and He is a giver. Because of this, when you help people, you will feel the most fulfilled and true to yourself. You should consider giving 10% of your income to your local church or your favorite charity. We take pastors for granted, and they deserve way more than we already give them. You don't have to give everything. You should keep the goose and give away the eggs generously, but wisely. Author style. Dave Ramsey is an evangelical Christian, and his beliefs show up in his writing. He frequently references the Bible and states that prayer always works, even in financial disaster. He includes success stories in a We Did It section at the end of each chapter from his own life and from people who took his advice and courses. He also quotes people from his Facebook group Financial Peace. He ends each chapter with key points and questions for reflections, and offers financial management forms at the end of the book.